In this video, we will discuss why I think it is a very good idea to short Tesla stock in the next upcoming year or two. Okay? So many of you, I suppose, know the company Tesla. It manufactures electronic vehicles, and in the last 1.5 years approximately, the price of the company has grown very significantly, possibly maybe tenfold or more. Okay? This increase in price, I believe, it is not reflective of the company's situation or the company's growth. Because if we look at Tesla reports, we will see that the company's sales growth has grown only in 20% from 2019 to 2020. So there is no real reason for this spike in price. I know that many say that Tesla has a great future and it will be the dominant car manufacturer in 10 years. But if we take into account the car industry today, yes, we look at the entire car industry, Tesla has a valuation of approximately 625 billion, which is bigger than all of the car manufacturers in the world combined. Okay, so even if Tesla will be the biggest car company in the world in 10 years, or the only manufacturer of cars in 10 years, it does not deserve a valuation of 600 and wait a minute, a valuation of $625 billion, as we see right now, $620 billion. So it does not make sense. Okay, so remember, a rule in investing, just like Warren Buffett said, in the short term, the stock market is a voting machine. Right now, a lot of people are voting that Tesla is a very popular company. But in the long term, the stock market is a weighing machine. It has to go down to reality, that the stock price has to go down if the market has any reason in the valuation of the stock price. Okay, so let's look at exactly how much Tesla will go down. Okay, so let's look at the chart. In the last year, we can see that the price in June 2020 or March 2020 was $85. It has gone up to $850, tenfold. Okay, in order for us to evaluate how much the price can go down in the future, let's compare Tesla to the currently biggest car manufacturer in the world, Toyota. Now, Toyota has a market cap today of $251 billion. Tesla has a market cap of $621 billion. If we compare the revenue of both companies, we will see that the valuation of Toyota is based on a revenue of $255 billion. Now, comparing the revenue of Tesla, it has a current revenue of the last 12 months of approximately $36 billion. Okay, so the market cap of Tesla is almost 2.5 times more than Toyota, even though it has only 14% of Toyota's revenue. Okay, so the valuation of Tesla is 17 times its revenue, while the valuation of Toyota is only 1 time its revenue. Now, let's assume that the market will be reasonable again in 1 to 2 years and evaluate Tesla as the real price it deserves. It will evaluate it as a one-fold of its revenue, which is approximately today 36 billion. Okay, And if we need to divide that current price in 17 in order for this company to compare to Toyota and its valuation. So the target price in 2 years, I believe, will be $644, which is the price today, divided by 17, which is approximately $38. Now let's be conservative and assume that the company will grow by 20% each year. That's maybe 40% in 2 years. So let's see how much is it. So I believe the current price, the price of Tesla in 2 years will be about $53. Okay. Now, the main reason that Tesla went up this year is because it was very hyped. One of the main people who hyped the price of Tesla is Cathie Woods with its ETF ARK Invest, which bought heavily into Tesla. Yes, and it was a self-propelling prophecy. And I think it's a bubble. It has to burst eventually. Now that we concluded that the stock price will go down, let's look at the two options to short Tesla stock. One option is to short it directly with your broker. You short the shares, yeah, but I recommend that you put a stop loss to this short, because remember that the stock market can be irrational longer than you can stay solvent, which means that the stock market can remain irrational. So that's why you have to put a stop loss. In a case like this, you will make a lot of money. If you short it today, you will make approximately 10 times your money in 2 years. That's a lot of return. Another way to short the stocks of Tesla is to buy put options. Okay, let's look at the put options and what are they selling for today. We will look at the options of the stock that expire in 2 years, June 2023. Okay, put options, and we see that the price of put options of approximately $500 stock price of a put option costs around $100 today. So if you buy a put option, you may be able to make 5 times your money or a little bit more. So I think it is a good idea to short the stock directly and not through a put option. There are all kinds of put options with different risk and different leverage. It is notable. It is you can look at them and decide if you want to buy a put option, even so. But I recommend shorting the stock directly. And that's it for today. I wish you successful trading. Be careful with your shorts. Always put a stop loss in your short. And good luck. See you in the next video.